The recent GST changes have set off a new wave of challenges for businesses across sector. Beyond the headlines of slab divisions and rate cuts, companies are grappling with practical questions that affect day-to-day operations and long-term strategy. Make life easier, we have with us today MS Money partner, Indirect Taxes, Deloitte India. Good to have you with us, Mr. Money.
Thank you.
First question to you would be, in a very summary sort of a way, what are the changes that the government has done at the moment? What is it that we're looking at?
See, I think we need to go back a bit to understand the changes to realize that till 2017, we had multiple indirect taxes. We had a central excise duty, a service tax, VAT, which was separate for each state, an octroi, an entry tax, and multiple taxes all across. So what GST did in July 2017 was to combine all these taxes and come up with one tax, which is called the GST. But over a period of time, what happened was, despite being one tax, there were multiple rates in the tax, which was not the original intention when GST was started. Mind you, GST moved away from something like 100 types of taxes to 5 or 6 types of taxes. But over a period of time now, what has happened is that the multiple rates that we had, a 5, a 12, an 18, a 28, a cess, exempt goods, 3%, etc., was complicating the structure. This was leading to a lot of classification problems in terms of which tax slab a product would get into. So in very simple terms, what the recent change, which is effective from 22nd September, has done is to ensure that we now have just two rates of tax. We have a 5% and we have an 18%. We also have a 40%, which is a very exceptional rate for very few products. But at a broad level, if anyone says, what is the rate of GST in India? The answer is, it is 5% for essential goods, 18% for everything else.
Interesting. Okay. Like I mentioned, beyond the rate cuts and the slab revisions, how do companies ensure benefits are passed on in the absence of anti-profiteering legislation? I remember in 2017, there was similar doubt. But then I think we had an anti-profiteering part over there. But what happens now?
That's actually a very good question. See, in 2017, when we were moving into GST, there was an apprehension that many businesses which would get the benefit of lower taxes compared to the excise and VAT would not pass them on to the final consumer. Because in 2017 also, in reality, the tax incidence on goods did come down. So there was an apprehension at that point of time based on the stage of evolution of Indian businesses then, based on the size of the economy then, and based on the competitive landscape in the Indian market for various goods at that point of time. And therefore, we had Section 171, which was enacted, which was the anti-profiteering legislation. Very interestingly, this legislation was valid till 31st March 2025. And it's only from 1st April 2025 that this legislation has not been deleted. It has just been kept in abeyance, in the sense it is no longer effective in the country today. It would have been very simple for the government to reintroduce or reinstate the anti-profiteering provisions. It would not have been tough at all. But to me, what has changed in the interim are 2 or 3 factors. One, there is a lot of trust that is there between businesses and the government today. The business trusts the government to pass on the benefit to the consumers, and the government trusts businesses as well. So on both sides, there is an element of trust, because government realizes it is very good for businesses to have lower taxes. Businesses realize it is very good for them to pass on the lower taxes and increase their market share. The second aspect which has happened is that in the competitive landscape that we have today for virtually every product, if one company does not pass on the benefit to a consumer, there will be somebody else who will pass that on and grab the market share. And that is the reason why it was felt that in the initial phase, we don't need a legislation. We don't need the anti-profiteering provision. Let us see what happens. And in the 2 weeks since the announcement happened, what we have seen is exemplary behavior by various businesses. where many businesses have gone and passed on benefits to the consumer, which goes beyond the GST reduction mandate. If there is a reduction of a certain amount on the price of the product, some businesses have gone ahead and they have passed on even more to the consumer. And that, to my mind, is a mixing of business decisions, market share decisions, pricing decisions, together with an indirect tax reform, which would not have been expected possibly in the stage of evolution that we had in 2017. But in 2025, it's a completely different business environment that we are looking at. We are far more confident. Businesses are far more evolved. Supply chains, which took a beating during the COVID pandemic, have again got evolved. All this leads businesses today to have the confidence by saying, yes, we have a rate cut. Let's pass it on to consumers. Let's win more market share. Let's win the trust of the market.
And there's a different level of maturity also now in the entire ecosystem, is it?
Exactly, exactly. So the entire ecosystem today is geared to pass this on a very real time online basis to consumers.
Right.
And that is because of the supply chain modifications that all businesses underwent during COVID pandemic. Because that is a period where supply chain was a huge hindrance for many businesses. So some people shrank the supply chain, some people ensured better logistics, better movement of goods, better warehousing. All of that is helping businesses today in passing on the benefits of the GST rate cuts on ASAP basis to all consumers.
Right. Let's talk about another aspect, which is, uh, dealing with accumulated compensation set balances. Uh, this is a problem which is, you hear a lot from the auto dealers, leasing companies. How are people dealing with something like this?
It's actually a little unfortunate because the compensation cess was originally expected to be there for 5 years. Later on, it got extended, and all businesses were of the view that it would continue till 31st March 2026. That is what the government had committed. Now, compensation cess is a major cost for many automobile dealers. It's a major cost for many leasing companies. And in case of leasing companies, the compensation cess is paid in its entirety when they buy the automobile. And it is recovered over a period of time through the lease rentals. Similarly, for an automobile dealer, the compensation cess is paid to the manufacturer when they buy the car. And they are able to charge the cess only when they sell the car. So businesses have a tough job today because the accumulated compensation cess that they have is a sunk cost for them. And they can use it only if they are permitted to charge a compensation cess. But from 22nd of September, they are not permitted to charge a compensation. Therefore, what happens to the accumulated balance, which is sizable? It's not a small amount, which is sizable, and it's large enough to change the business dynamics for many businesses. To my mind, there are a few options that can be considered. One is that the government allows them some way of using that compensation cess balance against their GST liability. This is something which is not possible in the present legislation because the compensation cess has a separate legislation. And in terms of that legislation, a cess can be used only to pay the cess. It cannot be offset against GST. So that will require a legislative amendment. Alternatively, since this is tax that has already flown to the government and the government has received the money, they can possibly look at either a total refund or at least a partial refund to various businesses. Otherwise, some specific businesses, as you said, including automobile dealers and leasing companies, are truly handicapped by this decision. If it does not get addressed in some manner, I'm sure this will start occupying the time of the various courts of the country.
Right. Mm. What about, looking at a wider canvas now? What are the kind of changes that organizations have to make when it comes to IT, procurement, distribution, and pricing? 2 weeks is what they got. What are the kind of changes there?
See, since this is an indirect tax related change and a rate related change at that, not merely the procedure, it impacts the pricing of the product. And the moment the pricing of any product is impacted, It impacts the entire back end and the front end. So this is something which impacts the discounting policies with dealers. It impacts all the vendors because the vendors who supply may have also undergone a rate change. And for those vendors, we would be the customers. Both of this on the accounts receivable side and the accounts payable side, when they are impacted, they impact IT systems big time. In addition to the impact on IT systems, various companies which have given a projection, listed companies, for example, which are impacted, where a quarterly projection is given and quarterly results have to be reported to the stock exchange as well, will now need to make revisions to those because this impacts all of them. And all of these changes need to be carried out in a manner where no business, whether service provider or manufacturer, loses any market share. Because losing market share is something which in today's competitive environment is very, very scary for everybody. No one wants to lose market share. And that is the reason why in the 2 weeks that businesses were given, they have ramped up, worked overtime, worked 18 hours a day, but most of the systems have been ready on 22nd September to have record dispatches.
Right. And are most organizations ready with their new pricing formula? Because I remember some were saying that, it might be difficult. For example, very small things like shampoo, maybe, if it is priced at 20, bringing it down to 18 does not make sense. Do we increase, the amount of volume in it? Similar questions came up in 2017 as well. Have those parts been addressed by most organizations?
Yes, I think most organizations today have the capability and maturity to decide that. Certain smaller pack sizes would have had grammage increases. In some cases, the grammage increases would be necessary because of coinage issues. So we do not get coins. I think most of us have not seen small denomination coins since a very, very long time. In any case, we have UPI, and in UPI we can put whatever number we do. But some businesses would go for increasing the grammage. In some businesses, increasing grammage is not a viable option because it means changing the manufacturing process. And therefore, those businesses would be passing on the reduction, maybe with the coinage issues, being dominant. There would also be businesses which would take a call right now to do something for, say, next 3 months to 6 months till things settle down, and then take a larger decision in terms of what SKUs they would want to continue, what SKUs they would want to discontinue, what is economic, what is uneconomic. So it is a very large business change that has happened, which is far more than a tax change.
Mhm. Right. Uh, And a very vital question was that, there are some, goods and services which do not, come under the GST slab now, not, neither on five or uh, these are the ones which are exempt. And how do you deal with, then, in that case, the loss of ITC or the input tax credit? What happens there?
It's actually very difficult for businesses which have been exempted, whether service providers or manufacturers of goods, because we have to bear in mind that once a business is exempted, the ability to recover input tax credit goes away, by law. They just don't have the ability to recover the tax credits. And it's quite possible that in many businesses, some of their inputs are also exempted, and therefore there is no tax loss. The larger challenge is that there would be certain goods and certain services which would continue to attract a GST. And therefore, while a manufacturer or service provider would pay GST to their vendors, that GST becomes a cost. And their cost base goes up. Because when a person is not an exempted goods provider or exempted services provider, at the procurement stage, whatever GST is paid is typically shown as a receivable. It's not expensed out in the books of accounts. But a manufacturer or service provider of exempted goods or exempted services will now have to add the GST being paid to the vendor as part of the cost and expense out that total amount without creating any receivable for it because it's not receivable at a future point of time. To that extent, there would be certain goods and certain services whose true cost, whose intrinsic cost will go up now, possibly marginally for some and maybe significantly for some others.
Hmm, interesting. So I think there was a lot of talk around will your life insurance and your term insurance plans get cheaper? Will it remain the same, costlier? What's your mix on this?
I think most businesses will typically pass on the entire benefits to the customer, and they will typically take a internal decision in terms of how to absorb the input tax credits. Those again would be different for each businesses depending on the proportion of their businesses.
Hmm.
So
Is
when we
there a
look at insurance, for example, there would be two or three standalone health insurance companies which would be impacted. But for many other companies, a health insurance is one of the products that they sell. It's not the only product that they sell. And their ability to recover ITC remains intact in respect of their other products and in respect of their B2B businesses. It's only the health insurance which is on a B2C basis which has been exempted. So since that proportion, that business proportion varies from organization to organization, each organization would be working out to what extent are we impacted by the ITC restrictions. And then they would take a business call, a commercial call in terms of to what extent they will be able to absorb it and to what extent they would like to pass it on to the consumer and recover it from the consumer.
Interesting. 8 years since we've seen GST now. Is there a need to change how ITC is calculated, how it's being managed? Is there a better way now?
Very good question again. So yes, I think the time for reimagining the ITC is here now, and maybe the next stage of GST reform, which may be possibly GST 3.0, should be looking at reimagining ITC also, because to some extent, the moment a business pays any tax to a vendor, and that tax is a GST, there should be a vested right to recover that without any restrictions. And the whole objective of GST was to broad base the entire taxpayer network within the country. And this has happened to some extent already, where today I believe we have got 1.5 crore GST registrants compared to around 60 to 70 lakh GST registrants, indirect tax registrants in the PGST period. So broadening the tax base has happened to some extent. It will happen to a much larger extent where ITC becomes some kind of a vested right for businesses, irrespective of what they do, how they do, if they are able to take that credit. Possibly it's necessary to reimagine ITC in future.
Right. You've touched on it during our conversation now, but what do you think happens to prices? Will it really come down? We seeing sales all around on the e-commerce platforms, plus everywhere else. I remember in 2017 when GST was just about to be become a reality. There was a similar phase when there were a lot of clearance sales. Prices had really come down. Is it comparable to that one, or this one is how do you see it?
See, this situation that we have today is very, very different. And I'm very confident that prices will certainly come down across sectors where GST has been reduced. Whether it is automobiles, whether it is air conditioners, whether it is FMCG, whether it is pharma, whether it is consumer durables, it will certainly come down. There is no doubt on that. And this is driven by primarily the reason that one, businesses today want to get more market share. There is a lot of competition in every single business. I can't think, excepting maybe one or two sectors where we have some kind of a duopoly or oligopoly. There's hardly any sector, like that. And the amount of money that is flowing in through startups again is so phenomenal today that if there is a business where there is a business opportunity because someone has not passed on a price cut, I'm sure there will be some startup founders who will be eyeing that particular opportunity and they will come out with a product offering or service to exactly take care of that. So that is what gives me the confidence to say that rate cuts this time around will certainly get passed on. That's also what is giving government the confidence this time around by saying, look, we don't need legislation. We don't need to force businesses. We just need to tell them to pass it on and they will pass it on.
Right. Last question to you would be, what does it do to the GST collections on a monthly basis? That's been on the rise. But what's your view on where would GST be? I mean, we are now getting into a festive season, which is technically, been a season where GST collections do tend to go up. But if you have to normalize it, how do you look at it?
So I had said this earlier also by saying, after the recent changes, when we use the term GST, for me it signifies two things. It signifies a greatly simplified tax, and it also signifies a great sense of timing. So, from a timing perspective, there could not have been any other time which was so perfect to introduce GST 2.2. If we look at collections, it is a tricky area, and it is an area where the government has shown a lot of courage in trusting businesses to pass on the benefits, which will lead to increased volumes and increased buying. Disposable income has, in any case, gone up on account of the income tax changes that we saw a while back. And keeping in mind the fact that the disposable income is now going to come into the festive market, there is expected to be a very big volume bump that we expect. If the volume bump happens on the expected lines, I'm sure over the next 3 months we'll see record GST collections being reported again, despite the lower rates. The worry only could be what happens after the festive season ends and the consumption moderates. At that point of time, how do we look at GST collections? To what extent will they come down? Will they continue to remain even and uniform? That is the area which we need to wait and watch. Next 2 3 months, I'm sure the GST collections will be very, very good. But what happens in Q4 of the current year is what everyone will be looking at.
Great. I think as we close, it's clear that the recent GST changes demand more than compliance. They require agility, foresight, and collaboration. The insights shared today will hopefully help businesses not only navigate the current disruptions, but also prepare themselves to respond swiftly and strategically to the next phase of reform. Thank you so much, Mr. Mani, for joining us today.
Thank you very much.